Hello, my name is Sine Sibiya. Thank you for listening to this podcast. I'll be taking you through a performance update of the banker portfolio to the end of the first quarter of 2022. The banker portfolio is a single asset class portfolio. The specialist investment managers selected for this portfolio may invest only in money market instruments and cash. Money market instruments are liquid financial instruments that basically simulate cash but often give a higher return. The managers are given a specific mandate aimed at providing an investment return above the average of money market portfolios, while maintaining a high degree of liquidity and capital preservation. They may only be exposed to institutions with an A1 credit rating or better. Looking at the manager lineup, the portfolio has three underlying managers: Takwanza, Aluwani, and Old Mutual. Takwanza having an allocation of 40%, Aluwani at 35%, and Old Mutual at 25%. The portfolio continued to deliver returns ahead of its benchmark, which is the short-term fixed interest core deposit index, otherwise called the STEFI index. The portfolio is ahead of its benchmark over all investment periods. Quarter 1 2022 saw two 25 basis points hikes, interest rate hikes, at January and March, taking the repo rate to 4.25%, a total of 75 basis points higher than when the monetary tightening cycle began in November 2021. What started as a measured and moderate normalization of very loose policy has now morphed into much more uncertain and trickier scenario for policy authorities. Many market commentators view there will be at least another 100 basis points of hikes in the repo rate in the remainder of the year. However, the risk may be for further upside, which the market certainly subscribes to, as the FROS, or the forward rate agreements, are pricing an additional 2.5% of tightening to come. The traded money market has reacted accordingly, with the 3-month JIBAR rising 48 basis points to 4.36% and the 12-month rate moving 97 basis points higher to 6.4%. The credit market was largely stable over the quarter. The most significant development for the portfolio was the continued drift wider in senior bank spreads. All the underlying managers contributed to the outperformance of the portfolio, with Aluwani and Takwanta being the standouts of the portfolio. The drivers of performance of Aluwani is determined by the level of interest rates and credit spreads, or the income, as well as any changes in these, that being the capital. On the duration side, what contributed to performance was being underweight duration during the period when the South African Reserve Bank raised rates. On the credit side, Aluwani do not believe that the premium on offer is particularly attractive as spreads are lower within their historical range. However, they are finding some opportunities and are starting to move away from the defensive positioning we have had during COVID-19 into some of the more cyclical sectors given the improvement in the macro backdrop. The Quanta Fund maintained its higher allocation to FRNs, floating rate notes, which offer a good yield and can be easily liquidated when cash is required for cash flows. The liquid portion of the fund remains high to cater for cash flows. The yield enhancing portion of the fund is largely invested in structured notes from the banks where they can earn higher yields than listed credit assets. The Zakwanta Fund continues to remain underweight credit since mid 2020 and the fund is earning an attractive yield above the 3-month JIBAR. Looking at the asset allocation of the portfolio, it is allocated completely to the interest-bearing securities, with allocations to cash for the most part at 62.8% and an allocation to bonds at 37.2%. Thank you for listening to this podcast.